All right, I see some people trickling in, so I figure we can get started. Welcome everybody to our next webinar in the series. We have a very cool guest here today, Danny Schneider, who is the Director of Financial Crimes at Lead Bank. Danny, thank you very much for joining us. I think I've seen you speak before at a live event, and you had a lot of interesting things to say. So I think we're all going to benefit from your knowledge. I'd love to start just by getting a little bit about your background, how you ended up in the AML world, and how you ended up at Lead Bank specifically. So I'll let you take it from there.
Awesome. Thanks, George. Thanks for having me. So again, yeah, I'm Danny Schneider. I'm the Director of Financial Crimes for Lead Bank. Lead Bank is a financial infrastructure company that empowers the biggest names in fintech. And we also have the luxury of having a community bank charter. So we are both a licensed chartered institution as well as a technology infrastructure platform. I've actually been at Lead Bank a long time, comparably in the tech world. I've been at Lead over 7 years. I was hired in 2018, back when Lead Bank was a tiny $300 million community bank. We had three branch locations. We had two in Kansas City, and we had one in Garden City, Missouri, which, if you're from the Midwest, that still probably doesn't mean anything to you. Our original branch that was opened, oh God, over 100 years ago, I think at this point, or very close to 100 years, was in a town of 1,500 people on a good day. So I mean, we really did come from like agriculture banking roots, community banking roots. And when I was hired, we signed our first banking as a service client in 2018, and that's what I was brought on to help build the program around that, as well as some other higher risk areas that the bank was looking to get into at that time, cannabis being one of them. We built a cannabis banking program back in the day. All of our success led to us being acquired about 3 years ago by a group of executives from Block, or Square, I guess as it was known back then. They spun up the first industrial loan charter bank application for Square, which they still have today. And they always really struggled in the sponsor bank environment. So they bought us to create the sponsor bank that they wanted to see when they were in the space. So that's kind of what has led me here. How I got into AML, I kind of joke about this, but it was completely on accident. I was, oh God, about 10, 12 years, 11 years ago at this point, I was an assistant branch manager for US Bank in Kansas City, Missouri, at a retail location in Kansas City. And I was willing to do anything to get out of that job. And I had an old colleague of mine that went to the AML, one of the AML teams at US Bank. They had literally just gotten a $680 million consent order, so they had to beef up their AML processes. So they did a bunch of hiring, a bunch of internal promotions, and that's how I ended up on that team. And I actually really liked it. It really meshed with my own personal value system. It was something exciting. Every day was different. And I got a call out of the blue one day from a recruiter asking if I'd be interested in a entry, kind of a junior level BSA officer role at this little community bank. And I said, yeah, why not? I was pretty disenfranchised with the really big bank culture and bureaucracy and kind of some of those things that some of you on the webinar have dealt with in working for a big company. And so I jumped ship and went to the complete opposite side of the spectrum. And I think I was the 40th employee at Lead, and still here today. So that's kind of how I got here.
Yeah, that's a great origin story. I think there's a lot there. Number one, like you said, I think 7 years in any one place in this environment is basically a lifetime. And I think you are absolutely right. Aside from some of the attendees, your host also was very sick of the traditional banking culture, and that's how I found myself in fintech as well. So I think a lot of us can relate to that. Um, so, obviously, in your role, you oversee, well, Lead obviously has a number of partner fintechs, and you guys have oversight over their programs. I'd love to hear about some of the issues that you sort of see across the board, as well as how you view or like how you think about the program testing of partners, and just oversight over the partnerships more generally.
Yeah, I mean, so the challenges that I see in the industry and in the space, they never go away. I think every time that there's an administration shift or something like that, people have that knee-jerk reaction of everything is going to change overnight. And that doesn't happen. Um, I mean, you just have to think that, okay, well, yes, maybe the people at FinCEN or the people at the OCC or FDIC want things done a different way. They try to make these changes. It can take a while to shift down to like the examiner level, because they have to be trained. They have to be trained on the new expectations, and the FFIEC has to be updated, and all of that fun stuff that we scour LinkedIn for on a daily basis. But I think a lot of the challenges that our competitors and ourselves also are seeing is right now the biggest one is scalability. I think companies tried to do the middleware thing to make that easier. I don't think that went super well for a lot of banks. I don't think that was all necessarily like the middleware's fault. I think people are quick to blame the middleman, and I mean, did they do things wrong? Yes, but the challenge is still there of if you're outsourcing anything to a partner, whatever it is, whatever your model is, if you allow them to bring their own tech stack, if you kind of act as a regulator, um, which is our model, just for full transparency, we don't really do anything for our fintechs other than like thought partnership and helping them roll out new products. We do expect them to run themselves like a bank, and they have to have a regulatory compliance team, financial crimes, fraud, legal, all of those risk areas that we look at on a daily basis. So I think the biggest challenge is scaling that oversight. And I think, there are obviously technology solutions out there that can make that easier. If you have the luxury of working for a bank with an in-house engineering team, you can build some of that yourself. You always have to ask yourself, is this a build problem or is it a buy problem, or how are we going to solve it? Um, I think regulators are much more comfortable now with the concept than they were 8 years ago, or even 3 or 4 years ago, when all of those banks were getting those consent orders, just one after the other. It seemed every week there was a new consent order coming out for a BaaS sponsor bank. So, I mean, I think regulator comfort, a lot of that, I don't know if I buy that that's a problem anymore. I think there is still some mismatch between bank risk teams and what regulators want to see. I think it's getting a lot better. We like, for example, we take that very seriously. We have a very good relationship with our regulators. We're constantly in contact. They talk to us. We talk to them every quarter. We send them reports and reviews and different things that we're doing or that we're looking at doing. So, I mean, I think just keeping that open line of communication is the easiest way to solve some of those challenges.
Yeah, that makes a lot of sense. And I think it sort of you're not really asking your fintechs to do anything that you're not doing yourself, right? Like if you want them to check in, but it's like, well, we do this with our regulator, so obviously we would like you to be able to do the same thing with us. Um, so one of the other things I wanted to ask you is, do you find any consistency where fintechs might underestimate their own regulatory risk? And sort of in the same vein, um, are there common root causes uh, to those problems that they're just not really considering?
Yeah, I do see that. I think a common thread that we hear pretty often is, well, we're not regulated. We're not the bank. So we're not going to be held responsible for A, B, or C or whatever it is. And I think that's really where like a partnership mindset comes into play from like a first principle standpoint is like, yes, you are not regulated. That is a fact. You are correct. But the company that is empowering your entire concept of money movement is. So you have to do some of these things for us. And that does include sanction screening, like fraud, onboarding your customers. I mean, responding to complaints, like which isn't really a financial crimes thing, but on like the regulatory compliance side, like so we do see that, but I will say over the past 2 to 3 years, they're all aware. Like they know that if they want to get a bigger sponsor bank or a more reputable one, then they're going to have to do the work and they're going to have things in place. I think startups can get away with it a little more because there are banks that cater specifically to startups and they do a lot of work for them so they can focus on bringing their product to market and scaling their product. Um, but though some of those banks, maybe they have technological limitations or growth. Maybe you can only get to a certain size due to deposit restraints or on-sheet lending restraints or whatever it is. So I don't know. I do think that they're more on board now than they used to be, at least from what I've seen. I think some of this is regulatory posture. I mean, I think the last administration, at least, was very consumer protection oriented, very adamant that these companies operate above board. And I think that is still there today. Like I think that is kind of a misconception that, oh, it's just the Wild West now. They're removing all these guardrails. We haven't seen that. I can't say that that's not happening with some banks or some places, but our regulatory expectation is the same today that it was 6 months ago or 2 years ago, even.
Yeah, that makes sense. And I think, you sort of nailed it earlier that even when there is a change in administrations, it's not like everybody who's been hired to do these jobs automatically shifts their mentality or their focus. Training still has to apply. So I do think that to some extent the administrative stuff gets talked about. I think it's just politics isn't the national conscious, so I think people think about it more. Interestingly, in your answer there, you sort of preempted one of my questions, but it actually feeds nicely into it, which is right, as you mentioned, you're the regulated entity, and you kind of have to let your partners know that that's the case. Um, how do you find the right balance between educating your partners on their responsibilities versus having to say, okay, no, now we're actually gonna, now we have to force these requirements on you. And if they, especially when there's like pushback from them.
Yeah, I mean, we educate them from day one. I mean that's part of our sales cycle. I think similar to, or not similar, different from some of our competitors is we don't really have a sales function, so to speak. Until the last calendar year, our business development people were our chief risk officer and another one of our founders who's a data scientist in his old life. So they actually came at it with a very like compliance forward mindset, which I think is different from a traditional sales function. And we do have a head of partnerships now who, thankfully takes some of that burden away from other members of the team. But we don't operate like a traditional sales function. Our compliance people are in the room day one. And once we figure out what the product is and what the funds flow is, we give them the requirements. Like, okay, here's the data we're going to need. This is everything that we need you to have. We have a pretty robust onboarding process where we utilize some technology and they can see every single document that we need or every single conversation that we have to have if it can't be explained well in a written document. Um, I would say the pushback we get is generally fairly limited. Like I think a lot of our partners understand that they have to do some of this now to run a financial services company. And I think that That to me was the hardest part about being an AML professional in a very flexible fintech world. And you're having to be very creative to meet the same regulatory requirement that maybe no creativity was allowed for a long time. Like, I think AML is generally considered like we're the wall of doom, is what my chief risk officer always calls us. So you have to get past us to get to the rest of the bank. That's not the case everywhere. Like we kind of we're very unique in that we have kind of like a first right of refusal here. So if we meet a team and we're like absolutely not, there's no way that they're going to be able to do what we need them to do in this time frame. Is there pushback? Yeah, there is. I mean, especially on like risk modeling, I think that's something that historically a bank was like, okay, you answer these 15 questions before you open your account. Here's your anticipated transaction volumes that you think you're going to do over the next 6 to 12 months, and it just spits out a risk score, and that's what you run with. I think for my team, that has been our biggest shift of thinking is fintechs generally have access to so much more data than some banks do, and they can create pretty complex, like very effective customer risk models or fraud models, especially like with device information and AI and just everything that's out there now. I would say that they're much more aware of what they need to do, but they're gonna do it in the most creative way possible sometimes. And that is where we come in as the bank, is we have to explain that approach to our regulators, is like, this isn't your standard pre-onboarding risk assessment. There's all these data signals, and we can show you how they all flow in and generate, the quantitative risk of this customer. But it does require a little bit of finesse, and that's a big adjustment. I think that some banks that are getting into this space now don't understand, and it can lead to some heated discussions, because banks historically have dug their feet in the sand, I think, and this is the way we're going to do it, and there's no exception. And the way we do it is, well, give it to me. Show me, tell me how you want to do this, and we can work together and figure out if it's possible. Because sometimes it just may not be. Like sometimes they may want to do something, and you're like, oh, I don't know if I can sell that to our senior management or our board or whatever, but most things you want to do, there's a path forward somewhere.
I think any compliance professional that's watching this would absolutely love a management team that lets you in the room on day one in order to be able to vet people to that extent. So you've definitely fallen into a pretty good situation there. Um, with respect to all right, so right, let's say you have all your partners. Let's say that there's some new requirement, whether it be like a new regulation that's coming out, or maybe it's just something internal that you guys want to start tracking. How do you go about rolling out that kind of information, considering you have a multitude of partners?
Yeah, so we utilize a project management software, and we also, we're a tech company, so we use Slack like everybody else. But anytime we have a whole regulatory change management process, and anytime something is changed, or at least on my team in my world, this isn't for everyone, but anytime FinCEN releases a new guidance or a new advisory or whatever, we digest it. We actually utilize AI for a lot of this now, but we condense it down into something that's understandable. I always say if you can't explain it to a 5-year-old, you probably don't understand it. So we condense it down and we share it to my direct counterparts at all of our fintechs, because we do require every one of our fintechs to have like a chief compliance officer equivalent. The title, I mean, you can call yourself whatever it is that you want to call yourself. You're not a regulated entity. It can be whatever, but we share that, we go over it, and we're like, all right, well, we will give you some time, give you a couple weeks. We want you to read through this, come back to me with what you're going to change. Because if like FinCEN is taking the time to release a guidance on like North Korean IT hackers or Iranian shadow banking, when I think that was the one that came out like a couple weeks ago, like, is this effective to is this applicable, I should say, to your customer base? Yes. Okay. Then tell me what you're going to do. Like, tell me how you're going to roll this out. And then we normally share what we did. We're like, this is what we've put into place. Now, keep in mind, this is for like our entire bank. You may need something more specific, but it's just really that partnership mindset of we're all in the room together and our success all kind of impacts each other because if our partners start to fail, we're the regulated entity, so we're going down with the ship. Or if we fail, all of our partners get kicked out of their bank, and then, countless millions of end customers are affected. So,
Yeah. No, that all makes a lot of sense. I mean, look, it sounds like at least at lead for the most part, you guys are sort of communicating this stuff out pretty well, and you have regular check-ins. But I'd say I want to get your kind of take on in the industry. If let's say you're a bank, you onboard a few partners, you didn't realize that they had certain problems, or those problems start to develop as the relationship goes along, which basically forces you to be reactive. Do you think that sponsor banks would benefit from getting real-time feedback about their partners program?
yeah, absolutely. I mean, we've all been a part of something where it maybe starts out as a tiny problem, and then out of nowhere, in 3 weeks, you're at the office at 7 o'clock at night and you're just like, oh my God, this is so much worse than I actually thought it was. We thought it was only going to affect 100 accounts. We just got a list of affected accounts from our partner that's like, there's 12,000 accounts on this. Like, that's a lot different than 100 account problem. So I think the faster that you can get feedback will only help you. Now, like with that, you need to make sure that you have staff to actually deal with real-time alerts or real-time data problems, because the speed at which you're notified really doesn't matter if you have two people that are responsible for 30 partners or something. Um, that's always I don't want to say critique, but that's always my thing when people push like real-time fraud monitoring, for example. Well, okay, it's real time. That's great between the hours of, 7 and 6. What do you do on a weekend? If you're a small company, what do you do on Friday night when there's a fraud alert for a wire or whatever? Like, so I mean, I think it's like, yes, there is the speed of notification, but you need the people in-house to react to the notification and action it or do whatever it is that they need to do.
Yeah, that's a great point. And I think staffing, I think, is always something that need to be cognizant of. I think most of us, if we've been in compliance, we've always said that whatever staff I have is not enough, right?
Yeah, right.
Um, I want to be mindful of time. We have about 5 minutes left, so I want to open it up to any questions that our attendees may have. So where's the chat window here? Oh, there we go. Um, all right, first question. What do you think should change for the scalability issue to be solved? Or do you think it's already happening with regulators being more familiar with the space?
Oh, that's a good question. I think a lot of it in terms of the scalability problem, a lot of it is technology, but I don't think technology is this like golden bullet that's just going to solve everything because you still need the processes internally to back it up and to actually use it the way it's intended to be used. So I mean, I think there are a lot of companies out there that are doing really great things. You still need the people internally to do it. I do think the regulators are getting much more comfortable with the oversight model unless the bank does everything for the fintechs model. I think I know we didn't really talk about that today, but I think that has pretty significant ramifications. But I would encourage healthy skepticism with AI and not just jumping in feet first, because as someone who has RFP'd a lot of AI vendors over the last 3 months, they are not all created equal, and you shouldn't just rush into something because it's new and shiny.
Yeah, I think we all at the same time sort of realize how important AI is, but almost everybody's also getting a little bit of AI fatigue because it just seems to be like the conversation is everywhere basically. We have one more question so far. Do your fintech's reviews mimic your regulators' reviews, or are they different?
So the reviews that we do on our fintechs, I think that's what you're asking.
Yeah, that
We
seems to be
we
us.
we build them from the FFIEC manual. So we built them intentionally to be as close as possible to the way that the FDI, because we're an FDIC regulated institution. So like we built the way we look at fintechs to mimic the way that our regulators look at us. So there's no missed gaps or processes during it. So that's how we've done it.
Yeah, and I think that's the right approach, especially, because as you were saying, you're not one of the banks that will take on, some of the, like, we're not doing any of your compliance for you. This is all on you. So I think in order to keep yourselves, safe and protected and make sure that your partners are all in line, it's really the only way to do it. I think as much as whether we love it or not, the FFIC is like the Bible to a certain extent. I That's how I start in my career. I started in consulting, and that's basically how I learned AML. Sort of like a deep dive into it was just by finding out what people are looking for that are the gaps and how you strengthen a program. Um, we don't have any other questions, but we only have 1 minute left. So unless anybody wants to ask anything else, um, it doesn't look like anything's popping up. So I will just say, Daniel, thank you so much. I think this has been an incredibly informative conversation. I think we learned a lot about the proper way to assess your programs, and the sort of the right way of starting out your partnerships, which is, you like you said, you have to have the compliance people in the room on day one because you have to set expectations, and I think that you guys are doing a fantastic job of that. Of
Yeah, awesome. Well, thanks for having me. It's been a pleasure.
course, thank you all.